Okay, officially, welcome out to the Market Watch Group. Weekly market wrap. My name is Scott. I'll be your host. 3:15 p.m. Eastern. We're a little behind that. Letting everybody trickle in. Make sure that we have everyone. We definitely have a quorum. We're good to move forward. Disclaimers, as always, education, illustrative purposes only. We are not brokers. We are not advisors. We don't give guidance. We don't give recommendations. All we do is just talk about trading and what we see. What's the agenda? Let's talk about today's market. What's happening today, yesterday, why, what do we attribute it to? Let's talk about what we think that means relative to our market posture, and let's use that information to help inform what are we going to do with the trades we're in now, i.e. our next point in our agenda. What is our mindset for trades that we are going to carry over the weekend, right? You may or may not have many at this point. We're in an interesting place where we had a great run, and then all of a sudden yesterday everyone's like, oh, right. In fact, I said we need to be very careful because we keep using the word rotation, sector rotation, because yesterday technology was red, and it's like, oh, that's it, money's flowing. Yeah. Everybody take a big deep breath in. Take a big deep breath out. Relax. It's not rotation necessarily. Let's make sure we can just say, hey, is it consolidation? What's the difference? Rotation means it's moving out of here and into there, and we now see a different set of leadership in the market. Did we see enough for us to assess it in that term? No, absolutely not. Technology is still strong. Communication services strong. Not only that, those are all of those stocks that, as they started to pull back, would likely be finishing your trades, right? You're selling the last of it. All of it was profitable. Very good. The second you close a profitable trade, what should you think? Set up for the next one. That just like that. The exit is the start of the next setup. That's what's beautiful about maintaining a strong, consistent watch list where it's just like, yeah, as soon as we're done, let's get ready for the next one. If it doesn't come, it doesn't come. I want to be ready if it does. I can always not do it if it doesn't show up. Just because I start watching it doesn't mean I'm committed and have to take the trade now. Nope. I get to decide, hey, it just didn't materialize the way I thought. Okay, great. You've got 64 other stocks, 47 other stocks, whatever the number is. Okay, that's the continuity that we're looking at. I believe everyone has sound at this point other than Ellen, but I'm not getting any answers. Is everybody else hearing me? Yeah, let's get a quick check-in because it seems like David's a yes. And once we have one yes, it's kind of out of my hands. Sandy, Phil, you guys are hearing me okay? Todd, I'm not sure. You popped in, so I'm assuming you're hearing me. I hope so. Let me know if you're hearing me. Yes. Amazing. Thank you. Appreciate it. Okay. All right. Good little check-in just to make sure. I appreciate it, everyone. So yeah, I would love if you're willing to share as we start to really dig into this. What trades are you in, and are you going to carry it over the weekend? This is exactly the kind of market where we would. But the question is, how many trades do we even have on right now? What are we looking for next week? We're going to look at an opportunity list, trading plan progress. We're wrapping up section 4. Section 4 is risk management. So we're wrapping up our focus on risk management to get ready for section 5 starting on Sunday. Section 5 is your routines. What do you do in the morning? What do you do in the afternoon? What do you do at night? What do you do on the weekend? How are you going to take really, really excellent activities and habituate them and do it over and over and over again every single day? Okay, so let's get into it. Market. I don't know, Yahoo. I feel like this guy's frustrated, but we're up 1% on the S&P, 1% on the Dow. 1.25 on the NASDAQ, 1.3 on the Russell. Oil has dropped back down. Remember what we said about that oil trade if you took it COP. I know David took it on a paper trade. That oil trade is something we designated as off cycle. What does off cycle mean? It means that oil is not going to work in that normal all boats rise and fall with the market, right, correlation. Most stocks. But you also have your materials and your commodity related stocks like oil. You also have your defensives like staples and utilities. And so when I say off cycle, right, that's what I mean. Well, off cycle means that if the market all of a sudden gets good, the off cycle trade's likely to ease up a little bit. So am I surprised? Am I surprised that the oil trade or oil in general is pulling back with what is motivating the market right now? No. Am I going to close it? Also, no. I'm going to give it the weekend. I'm just going to see. I'm not 100% convinced yet. I definitely am bullish, and I'm definitely going to be ready to, but I feel like I'm not going to just like immediately be like, oh, no, it didn't work right away, so let's get out of here. Okay, so interestingly, PPI rises more than the forecast in the latest inflation wrench. So it's like Thursday, it got better than expected. And then everyone's like, that's it. That is it. Look at the interest rate expectations. Here's September. 88% priced in, we're going to get a cut. Okay, who agrees? I have to tell you right off the bat, I am still in the November camp. I think that, and the market's going to be like, it's a surprise. Oh, and so there could be a setup for some negativity in November, or excuse me, in September. I just don't. It was good on Thursday and then not good on Friday. So where does that leave us overall? And we're in an election year, a weird election year. I think they can just wait. Here's the other thing that others aren't talking about. You keep hearing people talk about. The oh gosh, I just completely lost my train of thought. Sorry. I'm going to catch it again in just a second. It was important. Interest rates. So the buildup, we've seen this before, right? We've seen this before back in February and March and April, where when we first started this year, everyone's like, oh, the Fed's ready to go. It was employment. I know where I'm going now. The election, yes, but employment. It's this buildup. We've had plenty of times where like, that's it, they're going to cut, and then it just doesn't. And then they didn't. And we hit that. So some people are like, oh, that's it. We're going to get it. Look how much priced in. No, don't be that convinced yet. Now, here's the thing. A lot of it is because people think that there's starting to be some softness in the employment. But look what happened. We were expecting jobless claims to come back up to stay in the 230s. We haven't even gotten close to 250 yet. And then all of a sudden we're back at 222. Now, a lot of it is there's been a surge of this. So right here, we're at 4.1%. If we look at in the last 12 months, the low is around 3.7 in the last 12 months, 3.7. Which means it's 4.4% higher now than it was in the last 12 months. And there's an indicator called the SAHM, S-A-H-M indicator, that says that if it goes 50 basis points, we're at 42 or something like that right now, above, 9 out of 9 times that signals a recession, 9 out of 9. However, interestingly, I saw something from the founder or the originator of that thought, the economist so-and-so SAHM, who's like, I don't know that right now is necessarily in that normal conditions realm, as we're still post-pandemic where we're like, oh, that definitely means it's going to be a recession. So I'm less looking at it, but I think overall, a lot of people, that's what they're using to indicate quote unquote softness in the labor market. I don't think we should do that. I think that we should be looking at empirically what is the unemployment rate. It's very low at 4.1. If it hits 4.2, it's still very low. It's not at absolute 60-year historic lows like it was when it established the 12-month low. So that's one thing. How often is when the SOM triggered, is it being triggered off of a historic low? It's a different set of parameters in that realm alone. So if it hits 4.2 and it triggers that, I'm not like, oh my gosh, it's at 4.2. 4.2, that's very low still. What I'm going to be thinking about is, are we still, look at ADP, still at 150, that's maintaining. 206 versus 200,000, that's an expanding labor market still. And the other thing that we look at is what we just were looking at here, which is if I'm not getting near 250, if I don't have a rolling average above 250, I don't see softness coming yet. There's anecdotal stories of layoffs, but are there broad-based workforce reductions going on? No, there's not. You're not seeing that. So whoever keeps talking about this quote unquote softness, not yet. We'll see it. It's not like we're holding our head in the sand and being like, it's all good, la, 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 la. No, we're willing to accept it, but show me the data that indicates that so that I can say, oh, yeah, okay, I see what you mean, right? Everything else is just simply a talking head drumming up fear. And, there you go. Okay. Real quickly, let's look at our posture and what we think it's going to be. So our trend scores, I don't expect either to change. Here is why. This is our trend score. It's based on these two blue lines right there. We have scored that as a 1.75 the whole time. Where are we now? Right smack in it. Unless we break above the blue line, in which case we might look to move to a 2 or a 2.25. Or we break below the blue line, in which case we start to move to a 1.5 and then a 1.2. Neither of those things happen. We don't really have, in my opinion, a decision to make here. We'll look at it on Sunday and we'll be like, yeah, this looks like what we thought. And then we move on. So that's going to stay the same. Now, let me go to the weekly and do the same thing. Let me find the right lines. That one, and can I click them both? No. But you see the gist. Those two lines right there. Where are we? Right smack in them? Unless it gets all the way up here and breaks through, that line is good. So I feel great. 1.5 out of 2, very bullish. 1.75 out of 3. I even actually said at some point I might consider, should this be a 2, just preemptively be a 2. I don't know. Doesn't need to be. I'm bullish right here. That's bullish. My volume has maintained bullishness, even though when we see a bullish trend score, we tend to see a neutral volume score, 0. The volume, we really pay close attention to when it spikes, when it gets to 0.5, 0.75, or minus 0.5, minus 0.75, because that tends to happen around market transitions. We don't really see market transitions without volume. It's just normal, normal, normal. And that's where we are right now. Real quick, what do I think for volume? Let me get back to here. I'm actually going to go to a 1-month daily chart. Here's what's interesting. We had one above average volume day, and it was sellers, and it was yesterday. This is where a sanity check may keep us at a 0. We'll see. I got one day back there that I'm going to probably discount because it's the last day. So then I have a positive day, then a negative day, and then a negative day. However, to follow my consistency, where's my drawing tools? Come on, drawing tools. Where are you? There it is. It was hiding. Okay. Okay. I don't know why I have two of them now. I only need one. So I have these 2 days, but I'm actually only giving them one. That's what we did last week. And the reason why is because we said, well, look, we actually went from here to here. So that distance is very similar to this distance, right? That's our total distance, one day to the next. So we're going to say that's one, yes, that's one, no, that's one, no, that's one, no. Interestingly, we can't tell now, but that was actually a bullish candle. The day prior was lower than that. And so we now have 3 days for the sellers, 1 day for the buyer. What would I normally do with that? I would actually normally score that to a minus 0.25. Okay? I'd be like, oh, I'm a little worried about the sellers. And certainly I'm aware of the fact and I'm open to it. But my sanity check says I'm going to start there and I'm going to end there. I'm going to draw the line and I'm going to say, are we sure that we want to say sellers are in control? Sellers are in control. The market went from 539 to 561. That's about 21 points. That's about 4%. Market moved up 4%. And do we want to say we think the sellers are in control? No, not at all. I'm going to basically say this is a 0. I had 3 selling days and 1 buying day, but I'm going to nullify this and basically say this is neither contributing. There's been an ongoing discussion actually on Sunday, so this will be interesting tomorrow. But that's what I think. I think I'm going to actually go to a 0. That is a decline. We are a 0.25 right now. I think it's going to drop to a 0. Okay. Major market. What has been our objective in major market? We are comparing, we're at a 0.5, and what's going to make us more than a 0.5 or less than a 0.5? If we see a surge in the Dow, we're going to think that's defensive, and we're going to score that down. If we see a surge in the Russell, we're going to think that's more aggressive. That's move money into risk. Appetite for risk is growing. Right? Okay. So here's the DIA. Pretty good. It got up to the old high. That's pretty good. Here's the IWM. Oh. Bazanga. This got past the old high to a new high. So, if anything, if we see enough surge into the Russell, that will give us an extra 1/4 point and move us to a 0.75. So right now I'm thinking I might drop here but rise here. And then I'm still exactly where I was. Sector rotation, what are we looking for? We have technology in place. We have communication services in place. We need more though. So we need something like financials. We need something like consumer discretionary, something like industrials. Do we have that? Let's see. Let's look at financials. Yeah, financials look pretty good. Even up now as we're going into earnings. We're going into earnings, so we need to see a little bit there. Financials. Oh, look at that. Just in the last 2 days. I don't think it's enough yet, but it's a start. Right? But it's a start. Communication services. Where's my consumer? Well, let's just look at Amazon as a representative. Do we think money's flowing in? I actually think Amazon's setting up for a trade. Yeah, I think we maybe could see enough, but maybe not yet. I think there's a good chance we're still another 5.75, except let's finish with the VIX. I don't think there's enough here, but if it's anything, it's closer to a 0.75 than it is a 0.275 or a 0.25. And let's look at the VIX. The VIX is interesting. No information yet. We have a calendar spread on. The calendar spread is a little bit above me. If anyone's in that, I'm going to show you what an adjustment to that would look like here in just a second. But the VIX is not confirmed a lower high. But like other things, I think it's closer to a lower high than anything. Overall, the VIX is low. There's not a lot of fear in the market. I always feel better when the institutions look and feel stable. Stable. And that's where we are. Okay. I hope everybody's hearing me now. I know that there was a little bit of concern and inability to for just a minute. So I hope that's there. Any questions about that? So, yeah, if you had some trades that you held on to, if you held on to like an Apple or a Google or something like that, yeah, you'll probably keep holding it based on today, right? Let's get to the watch list and let's see what is setting up. Apple. As of right now, I have to consider Apple still in consolidation mode, right? So I still think maybe we're going to see something like this, and I want to be patient waiting for it to develop. There's going to be a good number. Just because today is bullish doesn't change anything. We're still under yesterday's open, right? We're still inside of that same type of a consolidative range. Okay, let me see. Let's keep going. AMD. What's the thought process? We hit some resistance. We're entering the selling cycle. We think that's going to exist somewhere down through here. And when it turns around, we have a trade. So be patient. There's no need to, we're not trying to get it. We're not trying to force a trade after it went up for 8 days and now it's gone sideways for 2. Let's relax and see if we actually get a consolidation, right? Okay, what else? What else? Amazon. What has Amazon done? It entered its selling cycle here. Took them a little while. A big day yesterday, but not a lot of volume. I would say that there's a window in here. As this thing comes down and turns, we're looking to see where does it find that next support level. Like this back here. And then we try to catch that next bounce. Great. I think it looks fantastic. I think that looks phenomenal for an early week potential trade for next week. We're just waiting for some confirmation. That's it. Okay. AVGO. Close the rest of it. Close some here, here, and here. All profitable. Now it's pulling back. Now what? Well, as long as it stays above this line right here, then I think we now have the ability to watch this pop. We didn't get it. I was hoping it would get there. Maybe it was a little ambitious. Great. Now I want it again. And if it pulled back again, I'd think, oh, look, now it's a cup and handle. And if I can catch it on this and catch the breakout, I could have even more. Yes, we're bullish. Let's keep going to the well. Let's go again. Let's ask for more. This is the market when we can do that. Let's ask for more. Please, sir, may I have another? XP. Financials have strength, but look overextended for me. Boeing, interesting. BAC, a little overextended. Citigroup, overextended. We're just barely getting the earnings, right? We're seeing good earnings, but bad guidance, and it's a little bit of a pullback. Great, that's perfect. That'll settle right into a trade next week for us. Let's relax. Let's be patient. Let the trade come to you. Caterpillar. Okay. I don't know. I'm not convinced, but there is at least some stabilization, and Caterpillar is an industrial leader, so great. CL, you can see my adjustment. It hiccuped, so I just took this second half of the trade and I moved it over 3 days, and here we are. And this is it now. So I am going to carry through the weekend. I'm going to see if it keeps going. If it starts to fail next week, we'll call it a day. But guess what it does? It just keeps making a little more money. A little bit more money. A little bit more money, right? So, yes. CMG down, nothing there. We're waiting for it to pop. Oil. Okay, we got it. We liked it. It's now pausing here. Are there plenty of perspectives where I'm like, it looks okay? Sometimes this is what it does. It's off cycle. If all of a sudden next week the market goes into a funk, there's a good chance oil's pushing higher. So if you're going to carry some trades, this will bring you some balance if this is one that you're in. Costco, maybe. I'm starting to like Walmart better on the consolidation. I don't know what the hell that sell-off was. It was big and nasty with a lot of volume. Still looks overall bullish, but there's some concern there, and I think Walmart maybe looks a little better. Here's the Dow. Pretty good. FCX is copper and gold. Not much there. Bitcoin. I said it earlier. Bitcoin looks like a dead cat bounce. It looks like it's ready to drop further, so be careful if you're a Bitcoin trader. GE, again, failed to move. I ultimately never put the trade on. Everyone's like, it's sideways. I'm like, I know. I'm still waiting to see if I get enough confirmation. I didn't. No trade. I feel like GE is going to get kicked off. I'm doing it right now. It's off my list. It's gone. Executive decision. GLD. Gold looks okay. Google looks great. Question, do we have time? Do I have time for this to slide in to a potential trade and give me something before earnings? Maybe. Inquiring minds want to know. Small caps. Strizong, very strong. KBH following. So remember, it's not necessarily that this is small caps, but home builders are going to benefit from lower interest rates. Home builders are going to benefit from mortgage rates coming down, obviously. So that's a big thing. Coca-Cola, it bounced, right? It bounced on the 50. Meta looks strong. MFC needs a pullback. MMM. Okay. Morgan, I love Morgan, but we got to wait for earnings, and then we have a trade potentially. Microsoft is on my list for next week. So look at that. Microsoft, Google, Amazon, AVGO, maybe some financial, Citigroup. That's a strong. And everyone like the big seven. They're in there. They look good. Relax. Take a breath. We're okay. Micron. Just never could move. I don't know. Get impatient with it. Netflix. So this is where we start to think, wait a second, is this a consolidation? Or it's more of a sell-off now. Here's NVIDIA. Looks okay. Palantir. right? These are, I still think, let's be thinking consolidation. The fact is they got overbought, and now we're seeing this. SPY looks quite strong, but it is actually a little bit selling off at the end of the day. So here you can kind of see like, okay, yeah, we don't need to panic our way into some trades. Let's just relax and manage through the weekend as appropriate, right? So there you go. TSM, still bullish. UUP is back below where we wanted it. Let me get to my tighter time frame. And let's see what's going on here. UUP, got it. Here's the VIX. VIX looks great. And the VIX looks like it's maybe ready to, not yet. It hasn't done it yet. But it looks close to giving us a lower high, which would be a bullish confirmation signal. Walmart, add it to the list. Great trend, higher high, in the process of a higher low. Looks fantastic. Okay, so did anybody else, was there any issues with audio for anybody today? I know Dawn, or not Dawn, Dawn's here. Hi, Dawn, by the way. I know that Ellen had an issue. I see her in here. I hope that your sound started to work. But everybody else seemed to be okay. So those of you in the room, anyway, just let me know, even if it's working now. Did you have issues with audio at any point today? If you did, what were they? And if you did, what did you do to rectify? If at any given time we could maybe just have that, like where you're just like, hey, I had an issue, but I did this. I'm going to just compile it where I can be like, okay, 60, 70, 80% of the time it's one of these two issues, and I could put together some instructions to help along those lines. So anyway, I'm going to put that out there. At the end, here's the thing. When we used Zoom, we'd have issues there as well. No matter what platform we use, there's going to be some form of friction. But our objective is to try to make it as easy as possible for you to get in here, check it out, et cetera, et cetera. Jacob, you posted a question earlier. I am going to create a channel this weekend for recordings where there's just going to be an ongoing chronological record of recordings. If we make a recording, we post it. Boom, 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 boom. They will come via email. And I will also post new ones via announcements. So I'm going to make sure that there's 3 different ways. And you can also just go into our YouTube channel and subscribe. If you subscribe, you'll get alerts and notifications because that's where I post them first. That's where they're stored. And then I post links into our internal. So I will continue to make sure that you can get links quickly and easily accessible. Real quickly before we wrap up, we are working on section 4 is what we're finishing with right now. Section 4 is risk management, and then we are moving on to routines, right? Moving on to routines. So here's what it looks like. We are finishing our risk management rules. I will also be posting a sample plan that was asked for. That will be in this weekend's Discord updates as well. Awesome. All right. Questions, comments, or concerns? Hopefully you feel like you're moving into the weekend in a comfortable place. You're managing your trades into the weekend. You're already starting to get your watch list ready for next week. I'll tell you this. I think conditions look great. I'm still absolutely looking for trades. I'm looking to be bullish. That's my story, and I'm sticking to it. It's good to see everybody. Let's try to get some weekend engagement. I'm going to be around. I'm going to be popping in and trying to answer some questions as I do my work. So if you're around and you want to pop in, just ask some questions, say hello, whatever else. I'd love to see you in there. It's good to see everybody. Have a great rest of your day. And as always, happy trading.